Our Richard Engel will join us from a demonstration happening right now in Paris. Let's begin with the major financial news breaking this morning. Federal regulators seizing First Republic Bank, selling it to J.P. Morgan, marking the largest bank failure since the 2008 financial crisis. And joining us now, NBC News business and data reporter Brian Chung and University of Michigan economics professor Justin Wolfers. So great to have both of you with us. Brian, let me start with you because this, again, is the third bank to fail this year. What happened this time?
Yeah, and by the way, this is now officially the second largest bank failure in U.S. history, eclipsing the Silicon Valley bank failure that had held that title only about 7 weeks ago. Now, for what it's worth, First Republic was taken over early this morning by the Federal Deposit Insurance Corporation. But alongside the announcement that the government was closing the bank was an announcement that J.P. Morgan Chase would keep the doors open this morning because it was coming in and substantially buying all the assets of the bank. Now, there's essentially some workings between the government and J.P. Morgan Chase in making this happen. Sources have told me that Treasury Secretary Janet Yellen was involved and watching the situation as it unfolded over the weekend. But again, all this was to ensure that as First Republic ended the day on Friday, that they could open on Monday morning uninterrupted with all the deposits for the many First Republic customers still available to them. And again, those First Republic branches will now be opening effective today as Chase branches.
Professor Wolfers, today the Treasury Department stressed that the, quote, banking system remains sound and resilient. But for people who may be watching at home and wondering, is my money safe? What do you tell them?
The short answer is yes. The good news for most families is if you've got less than $250,000 in any bank account, if it's a real bank, your deposit is insured by the federal government, which means no matter what happens, your cash is safe. If you're one of the unlucky folks who's got their money at First Republic, guess what? It's already fixed, already solved. Walk into any JP Morgan bank and you can withdraw your cash. It's all there. The only thing that's going to happen to the existing customers of this particular bank is the name on the front of their ATM card is going to change and the name at the top of the statement is going to change, but the amount of money at the bottom of that statement completely unchanged. And more broadly, yes, there's been a couple of bank failures. They're small banks. They have a particular set of vulnerabilities, but they have a set of vulnerabilities that almost no other American banks have. And so I feel quite confident that the rest of the sector is in very good shape.
That is some good news. But if you look at the numbers, First Republic Bank had $229 billion in total assets. That was more than both Silicon Valley Bank and New York Signature Bank. I wonder, though, fear about instability can sometimes yield more instability. So even if other banks should be safe, what can or should be done to ensure that?
Yes, so there's a number of issues here. One is for your viewers, what should they do? Well, if you've got more than $250,000 in the bank, you probably want to spread it around a little so that you're insured. There's a broader question. What do we think is going to happen to the economy? These numbers look eye-popping, but we have to put them in context. $229 billion sounds like a lot of money. Saying this is the second biggest bank failure sounds big. But let me put it another way. This is the 14th largest bank in the United States. First of all, that means there are 13 that are larger. Second of all, it means there are 4,000 that are smaller. This is a very small part of the entire financial system. As I said, I think there are a small pocket that really just made some big bets and some bad bets that were poorly run and also poorly supervised. And the Fed has already come out and said, we're going to have to do a better job at taking a close look to make sure there's not future banks like this. But if you look at this set of vulnerabilities, there aren't really other banks that look like they're in this same set.
Brian, it's interesting to note that markets are reacting with maybe caution, but not devastation. You can see it's actually a little on the positive side this morning. The Federal Reserve recently predicted a mild recession this year. And so fears of the economy still going south remain. Has this banking crisis, the banking failures we've at least reported on, contributed to the sense of economic unease, do you think?
And Anna, just in the last few hours, we heard from Jamie Dimon, the CEO of J.P. Morgan Chase, which swooped in here to take the First Republic situation by the reins. And he was saying that this part of the banking crisis is over. Now, whether or not there are other parts of this banking crisis remains an open question. But if you look at what's happened with the progression of events with Silicon Valley Bank and Signature Bank in mid-March, and then a few weeks afterwards, First Republic going down, we have to remember that these were the three major banks that were catching most of the attention. And First Republic, namely, had the issues that it did over the past few days that ultimately led to its failure today, and then savior essentially from JP Morgan Chase because of a report last week that showed they had lost about 40% of their deposits since the beginning of the year. That type of deposit bleeding, people taking their money out of the bank, is not happening at any of the other banks, large or small, as Justin was just talking about, which underscores the unique situation that First Republic was in.